All right. So we just wrapped up Monday. Okay, so let's go over Monday session based on the newsletter I sent out yesterday. And then we'll touch up briefly on what we're looking at heading into Tuesday. All right, so let's see. First thing is first, let me pull up that newsletter. Okay, so heading into this week, the main range that was of focus, like the bigger range that the market's in, was pulled from the 4-hour time frame. Okay, and as I mentioned, this is our new range of focus into this week. We have 66.31, which is the lower end, all the way into the highs at 69.03. Okay, so the market, as I always say, only has two states that it switches on and onto the other one. Okay, and that's a consolidation and trending. That's all the market does. Now, each time frame, the market may be doing something. Okay, but as we go into bigger time frames, it gives us a much more clear general outlook. Okay, and for right now, or at least into this week, the 4-hour time frame is giving us that general outlook, and that is that the market is currently stuck trading inside of this 4-hour range, okay, from 66.31 into 69.03. As long as the market is inside of this range, it tells us that the market on the 4-hour time frame, which is a pretty big time frame, is in a consolidation state. And as long as we are in a consolidation state, we can be bouncing from the lows to the highs, from the highs down into the lows, from the lows into the highs, and back and forth like ping pong. That's a consolidation. There's nothing bearish about that. There's nothing bullish about that. Long-term traders don't profit in these types of movements, but for us intraday traders, we love it. It's very easy. It's very, very easy because it is easy. So, yeah. So heading into this week, first thing we know is that the market's stuck inside of this range. Okay, and the other thing that we know is that the market closed at the lows of Friday's session, which was near the lower end of this 4-hour range. We've been gapping down on Sunday's afternoon open for quite some time. So, being at the lower end of the range, the question was set on whether, can the market set up to fully test the lower end of the range? And if the market does come to the lower end of this range for any further downside, this puts sellers in position to attempt a breakdown trade. Meaning, for any further downside, the sellers need to break down this range to get any sell case going. Okay, that was our outlook. All right, so I kept it very, very brief right here. All right, so we're gonna zoom in on an intraday view. We're gonna review right here. All right, so right here. Okay, so this pivot right here, where my crosshairs are at, is the most recent pivot that was triggered onto the downside. Okay. So in yesterday's newsletter, what I stated was if the market remains or opens under 66.90, it is best to wait for a full retest at the potential buy zone underneath, being 66.61, 66.31. This is a retest of the previous week's low. Breaking under 66.61 puts the market to test inside of the buy zone. There was two scenarios I was looking at. Okay. Now, what makes this intraday buy zone significant is that it sits at the lower end of the 4-hour range. Another thing that makes this area significant is last time we were here, look at the reaction the market gave us. 66.31 into the next session gave us a high of 68.69. Do the math. Okay, I'm not going to do it right here. That's a huge reaction at this area. Okay, and as I state all the time, price has memory. Specifically at areas where there was huge reactions like this, whether it's on the downside or whether it's here at a support area, price has memory. It may not have the same, full-on reaction, but expect some type of reaction. This is a 200 plus point move from this area. Okay, so it's come on, it's a no-brainer. Okay, it's a very hard trade for the downside. We're closing at the lows on Friday. We're coming into an area that there was a pretty big significant reaction. We also know the market's in a range. To short that, it's you're a really, really risky trader, or you are a very poor risk management trader. Okay, so either one of those two. Okay, but anyways, so the first scenario that I was looking at is if the market were to open under 66.90, around this area, in between 66.90 and in between here, like above the buy zone, there's really nothing to do. Okay, and let's see. Yeah, there's really nothing to do unless we can reclaim back over 66.90. Okay, but this is a really good setup. It played out last week. Okay, so this is a really good example when we're dealing with intraday buy zones. Okay, I mentioned that breaking under 66.61. Okay, so the market gapped under this short pivot. Okay, which means sellers are still in control, and on an intraday perspective, selling pressure sustained and pushed the market lower. Now the top of this buy zone is 66.61, of course, and sellers broke under 66.61, which put a direct test inside of this buy zone. Okay. Now, as I mentioned, if the market breaks under 66.61 and the market is met with buying pressure inside of this zone, it's best to consider long entry back over 66.61, targeting these targets here as the first batch of targets. Okay, so we know this is an area where there was a significant reaction. Okay, we know it's an area where buyers have stepped in, and we have a clear marked buy zone. We opened up under 66.90. It pushed us to the top of this buy zone, and sellers even cracked into it and pushed the market inside. Sometimes we push, it can be here, it can be over here. The most important thing is that what we want to look for into these buy zones is when we break back inside of this buy zone, we want to see buying pressure immediately kick in. Okay, and buy this dip up. And once that dip gets bought and pushes the market back outside and over this buy zone, that's a long entry right there. Okay, and this was the first one that fired off last night, back over 66.61. Okay, and we quickly crossed off 66.70, 66.80, 66.90. Okay, so on this gap down, it pushed the market back inside of this buy zone, instantly met with buyers, pushed us back over. Longs were triggered. It's one that I took, was open about it, and this pushed us right back to retest the most recent breakdown pivot, which was 66.90. Now, as I mentioned, to set a definite short-term bottom in this scenario, 66.90 needs to be reclaimed to be confident on the long side. Reclaiming 66.90 gives us more confidence on the long side, as this shows us that the buy zone held, and the reclaim indicates to us that the market is holding inside of the 4-hour range, potentially looking to keep the market in a consolidation state on the bigger time frames. Okay, yeah, we're doing all these intraday things, but we have to keep in mind what's taking place on the bigger time frames. Okay, so yeah, and the reason why it gives us more confidence is because sellers triggered, a breakdown. But you gotta be smart. Where is, if you're chasing this breakdown, if you go short, you gotta be aware of where it's pushing the market. Okay, demand picked up, it pushed the market back over, triggering a failed breakdown at this level. Okay, and the market made a full round trip back into the upper pivots. Okay, so very straightforward session. These were the best entries right here. Into the cash open, the market started to consolidate inside of this range. I mentioned that breaking above 67.63 would extend us into 67.87. We missed it by 3 points. Okay, but great setup. Okay, absolutely great setup. Very easy. Okay, so I am trading that new June contract. So, but anyways, into Tuesday's session. Okay, what we know so far is that the market is just holding in a consolidation state inside of this 4-hour range. So, that's what we're navigating here. We're navigating the market inside of this range. Okay. However, we do have some obstacles overhead. Okay. And that obstacle, I think I have a better picture on the 1 hour. Right here. This obstacle on the 1 hour, okay, is the overhead breakdown area that was triggered last week. So, remember I said price has memory, right? Well, this was a significant reaction, right? From here to here. That's one of the reasons why we look at areas where price made significant reactions, because we want to be aware of them. It may not have the same complete reaction, but expect some type of reaction to it. Now, overhead, we have an area where there was a significant price reaction. Okay, if we go back 2 weeks, the market attempted to establish between 69.01 into 68.15. Okay, we consolidated here 3 days. Okay, after a failed breakout, we went back into range, and then we broke under this range, and then we saw a gap down. We saw a gap down straight into our buy zone. Okay, we had this pre-marked. We went long on it as well. And this eventually set us up to come back into this breakdown area. And we were watching the market to see if we can establish back inside of this range. And of course, buyers failed, and this triggered another sell. Okay, from below 68.15, it took us right back into the buy zone. Okay, so over the next few sessions, it's also important to pay attention, to these significant areas where there was a reaction, because we want to note that, okay, that's number one. Number two is we want to gauge that price action. Okay, for example, the market failed to hold. We triggered below this range, right? And we had a gap down that straight flushed us, 68.15 into 68.31. We'll say 200 points. About a 200 point drop, within a couple hours, okay? When we look at this, we're like, wow, that's pretty strong, right? That's really strong selling pressure. That was very quick. Okay? Now, a couple sessions later, after failing to establish here, without a surprise, at the same area, the market triggered a sell below 68.15. Now, how does this sell right here look compared to this? Does it look stronger to you? Does it look more impulsive to you? Does it look like sellers are just absolutely picking up momentum, and just how does it look to you? Right? That's what we want to gauge. Or are they getting weaker? Okay, like for example, we were looking at this area. Seller stepped in, just straight flush over here. Okay, now coming back into a couple sessions later, we have a sell, chop, 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 buy, chop, 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 sell, chop, 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 sell, buy, sell, chop, 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 buy, sell, buy. Okay, so it took us minutes to clear 200 points to the downside. Come back 3 sessions later, it took us about 2 to 3 sessions to do the same. So that's something we want to keep our eyes on, especially if we can set up to break higher into this week. We really want to monitor any sells that come from this area, and we want to gauge on whether they're getting weaker compared to this one. Are we holding higher lows? Okay, this gives us a pretty good idea of which side is stronger for right now, buy side or sell side. Okay, so that's the overhead obstacle we have. Okay, and the mistake that a lot of people do is they see a downtrend and they're scared to long, and then this longs comes up into play, and we're right basically under an area where sellers stepped in, and then they're like, you know what, market went up, let me go ahead and buy. But you have to be aware that you're buying at an area where selling activity has taken place, not once but twice, and it has triggered a downside of about 200 points. Okay, this was the prime area to get long, and from here we have pushed back right under this area. Okay, so that's something you want to take mental notes of. So very brief into Tuesday, what I am watching, okay, is we already went over this. We broke down under 66.90. We picked up demand, pushed us back over. Okay, we had long entry here, long entry here. Even longs triggered as a quicker day trade above 67.33. Okay, and since breaking above 67.33 at the cash open, all the market did was just consolidate between 67.78 and 67.34. So into Tuesday's session, we're watching to see if bulls can maintain this strength that we saw on Sunday, if we can maintain it, and by maintaining it is we're keeping the market inside of this range. Okay, and we want to see that strength carry over onto Tuesday. Okay, so breaking above 67.87, okay, sets up a retest at this bigger breakdown area. Okay, if we do get up here to test this area, we, this is an area where sellers were at. So what we need to see is the market put in a strong break above 68.15, and then we want to see bulls hold this. Okay, any dips under 68.15 to show us that bulls are really here, we need to see the market back over 68.15. Any dip under, we need to see them immediately bought back up for us to remain confident on the long side. Okay, that's what we're looking at if we do get a break above 67.87. Okay, the first support overnight is set at 67.34. All right, now as I mentioned, we found demand, we found buyers, and we want to see if we can roll that over into Tuesday. And as I mentioned just a little bit ago, is by sustaining those buyers, we want to see the market hold inside of this range. Okay, so if we come down into 67.34 and sellers attempt a breakdown, okay, and if we can see buyers immediately step in and recapture back over 67.34, that is something that I am interested in to consider quick longs. Okay, we got that one. We also have 67.02 as a area to watch for a good trap trade. Okay, if the market breaks under 67.02, it just would be best to be patient. Okay, and as this puts a retest back into our buy zone. Now, if the market does set up to get into this buy zone, remember, this puts the market at the lower end of our 4-hour range. Getting into this lower end of the 4-hour range puts sellers that for any further downside momentum, they need to crack this range onto the downside. That would be a much bigger breakdown trade. I don't trade that. I don't chase those, especially at the lows. I would rather watch for any failure of it to then get long. Okay, but yeah, so remember, if we do get above 67.87, this blue level, okay, we just got to be aware that, okay, let me start trimming, let me start trailing those stops higher. If we do get up into 68.15, remember, we got to maintain above 68.15 for us to be more confident on the long side. If we do see sellers at this area, remember, we want to gauge on how strong they are compared to over here this previous time. Are they getting weaker? Are they getting stronger? Yes, we got a lot going on. It's best to be tactical. Okay, this is our first trap level. If we break 67.34, sellers need to break it to show signs of weakness. Okay, if they break 67.34 and they fail to hold, reclaiming back over, that is a nice long entry I'll be stocking. Okay, so but if we break 67.34 and we can't get back over, just be patient. This puts 67.02. This is the lowest the bulls want to go. Under 67.02 does put the buy zone into play. So yeah, that's what we're watching. Little brief overview into Tuesday. We shall see how it plays out. We do have CPI, I believe, tomorrow. So possible catalyst right there. Then FOMC on Wednesday. So pretty action packed. Okay, so yeah, let's go ahead and see how this plays out.